Hey everyone, in this video I'll be talking about the cheapest, the most affordable locations across Australia where you can park your money, you can buy an investment property and do really well. I know so many of you think that property prices have already boomed and that now everything's unaffordable, there's only one way property can go, or that there's only so much, gas left in the tank and everything's bound to correct itself. Anyway, look, this video is actually just sharing the exact 17 most affordable locations across Australia to demonstrate that there's so much potential, so much opportunity in investing across Australia if you're open to being outside of Sydney and Melbourne, if you're open to being a borderless investor. There are so many opportunities out there in locations where it's actually still really cheap, right? Really affordable to buy. Okay, my name's PK and I help people build passive income through property investing using data without needing a crazy $15,000 per buyer's agent. And if you get value out of this channel, whether it's now or at the end, wait for the value, hit subscribe, give it a thumbs up, really important. Most people find it through a YouTube algorithm. I would really appreciate it, basically. All right, let's get going. So, if you wish to foresee the future, you have to consult the past. And the past tells us that the most sustainably high-performing locations across Australia are those where affordability is still solid. Now, of course, there are areas where affordability isn't there and they continue to go up. Yep. And then there are areas where it's super affordable, but they haven't moved in years. The prices of those suburbs haven't gone up in years. That's also true. So this list of 17 locations isn't a list that you can just go out and invest in willy-nilly just because it's affordable. Affordability is one factor that determines, to some extent, short-term growth, but more importantly, medium and long-term growth, okay? So the locations are here. And all of this is from ABS data, by the way. And the way that ABS reports it is basically if household incomes, if you're having to contribute more than 30% of your household income to repay a mortgage, that's deemed unaffordable, right? If you're able to repay a mortgage by using less than 30% of your household income, that's deemed as affordable. Okay, so 17 locations in no particular order. Number one, Brisbane, median price is 600K, thereabouts. There's still 30% price growth left before it reaches that 30% benchmark, before Brisbaneites, on average, across all suburbs, start to see that 30% of their income is contributing to mortgage repayment. So, a lot of gas left in the tank. Second is Adelaide. Median price is 500K now. There's about 40% left to go before it reaches that 30% mark. This is all ABS data, right? It's not, terribly insightful in that it's, some fancy algorithm or mathematical equation that I've come up with. ABS tells you this. You can find it yourself. Perth, average price around about 500K these days, 60% to go, okay? So much more affordable than Brisbane, Adelaide. Darwin, average price, pretty high, I would say, for Darwin, 550, but still 60% to go. Now, we're not investing in Darwin, but the point is it's still affordable. Townsville, average price or median value is about 360 or thereabouts, 100% left to go. So prices in Townsville could double and the locals would still see it as completely affordable, right? I mean, just think about that for a second. Now, of course, different locations have different characteristics. Maybe people move to Townsville because they only want to pay 15% of their household income towards a mortgage repayment, right? So you got to normalize for all these things. You got to understand them a little bit using data, but here they are anyway. Toowoomba, median value around 420K these days, 70% left in the tank. Rockhampton, 350K median value, 110% left in the tank. So even more affordable than Townsville. I'm not saying you should go out and buy in Rocky willy-nilly with a blindfold on, but certainly prices aren't going backwards anytime soon. Mackay, 400K, you've got 100% left in the tank. This is a common theme in these, central northern type Queensland locations. Ballarat's already gone up so much. Median value is 500k. We're not buying in Ballarat. We were doing that 3 or 4 years ago, but it's still affordable. 40% left before it hits that 30% threshold. Cairns is very affordable, 400k median value, 70% left, gas left in the tank, you would say. Bendigo, this is the biggest location we're buying maybe a year or two ago. Median value now is 500k, 40% left in the tank. And when I'm saying left in the tank, please don't get me wrong. This is not me saying it's going to grow by another 40% and then flatline. This is in the context of affordability. All right. Albury, Wodonga, average price around 400, 50% left. Wagga Wagga has 75% of growth left before it starts becoming unaffordable for the local population. Bundaberg, oh good old Bundy, median value about 350, got 90% left in the tank. Shepparton, in Victoria, 350k median value there, about 70k left in the tank. Hervey Bay, 450k median value, got 40% left in the tank. Launceston, 450 median value down in Tassie, 30% left in the tank, right? And if you contrast this with places like Newcastle or Sydney or Melbourne or Wollongong or Geelong, you're finding that that affordability story is negative, where it's actually not affordable. That doesn't mean it's going to start dropping, just because it's unaffordable. People are able to stretch themselves. There's foreign money. There's other things at play, but these were the 17 locations that are the most affordable. Now, I'm not saying we're investing in these 17 locations, but the science of property investing is to say, all right, well, if we have a list like that, how can we apply other data factors, another 10, 20 factors systematically through a system, not manually, so that we can isolate a particular location and then isolate a particular suburb, street, type of property in that location. It's so important when you look at affordability to buy outside of Sydney, Melbourne. So important to be a borderless investor. I talked about that in my 2022 predictions video 2 days ago. If you didn't check that out, that's a must watch, to understand what's going to happen in 2022. But, I just wanted to demystify and, dispel those myths that the property market is out of control and that it's unaffordable. Yes, if you've got your Sydney, Melbourne glasses on, it is. Outside of Sydney, Melbourne, there is so much left in the tank. It's not even funny. Guys, subscribe if that brought you value. If you want to learn more and actually understand and learn how to go and find those specific suburbs, find those specific streets, find those specific properties, low risk, high growth, high positive cash flow property investing, you can learn for free. My podcast, I'll leave a link below. We discuss these things in my Facebook group, also a link below. And if you really, really, really want to step up and you're serious about things and you're humble, right? Humility is so important. I'll leave a link to my website as well if you want to work with me. But guys, consume this content. It's free. Get educated. So, so important. 2022 is going to be a ripper year. I wish you all the very best. Give it a subscribe. My name's PK, and keep marinating your mind in real estate content because it will make you a ton of money. All right. Catch you later. Bye.